Hello, everyone, and welcome to the panel discussion, Adoption of Carbon Assets by Financial Institutions and Corporations. This panel is hosted by the European Carbon Offset Tokenization Association. In short, we are ECOTA. We are a think tank connecting bright minds like Simon, like Michael, like Victoria and Raphael, in and around the topics about regenerative finance, and we have a special focus on tokenized carbon credits. We want to provide you in the audience with the best possible education about this young, vibrant, and very much growing industry. At ECOTA, we are passionate about the intersection of sustainability and blockchain technology, and we want to use this combination to achieve a net zero future and a better future for all of us and for our planet. Panels like these are made possible by our trusted institutional members, so thank you very much for your support. I'm Max. I'm one of the 3 executive directors of ECOTA, and I'm the moderator for this event. But before we start, I want to encourage you in the audience to use our chats. If you have any questions, if you have something to add to the agenda, just use the chat. We read almost everything in there, and I will just chime in and let your question known to our panelists. Now, you might see some faces in this panel that were not on the preview thumbnail, so maybe we'll do a quick introduction round here. Victoria, let's start with you. What are you working on, and why are you passionate about regenerative finance?
I'm Victoria. I'm a lawyer with Waldeck Rechtsanwälte. We are located in Frankfurt, and we are specialized on banking and finance. And we are especially focused on the advisory of market participants, which would like to enter into the financial market. And we provide them with assessments on how to enter the market and what are the regulatory requirements. And our extraordinary focus is on the player of the voluntary carbon market. And yes, we provide them with assessments and help them to set up their business models and provide them with the awareness of the regulatory requirements. So that is the main topic of my daily work.
Daily business. Thanks for joining. Simon, let's go next.
Well, thank you so much. My name is Simon, and first of all, thank you for the invitation. It's a huge pleasure to be here today at the panel. I'm very much honored. I represent the Banking Association, the CEO of the Liechtenstein Banking Association. So you could say the voice of the Liechtenstein-based banks, representing more or less a bit the traditional banking side. All of our banks are active for core businesses, private banking. But what we try is to be a bit at the forefront when it comes to, on the one hand, sustainable finance, and on the other hand, digitalization, since we, as an association, we are convinced that these topics will completely change the landscape, completely transform the financial services industry. That's why we issued a so-called roadmap 2025. That's more or less the division or the plan for the banking center in Liechtenstein. And one of our key projects was to issue, as a first step, an own NFT. And I will maybe afterwards say a few words on that project.
Yeah, we're going to get to that. Don't worry about it. Raphael, maybe you can go next.
Well, thank you for having me. Hi, my name is Raphael Hess, and I'm here from Hardstocks, which is also a Liechtenstein-based company. What it does is basically that it's enabling new vehicles and investment structuring and other possibilities around about the blockchain and the regulatory laws, which are really innovative in Liechtenstein, which apply to the whole European economic area. And therefore, we try to enable really new and innovative projects to get them financed, and also try to create possibilities how we can create a future together where we get most of people participated into it. What we really do and focus is basically set up SPVs and make them digitally manageable, which is basically a key component in order to manage these new financial structures.
Thanks. Michael?
Yeah, thanks for having me. So my name is Michael. I'm one of the co-founders of Calirius. I have a banking background, spent the last 20 years in investment banking, and came across the whole ESG and voluntary carbon market topic from 2 angles, basically from the institutional investor side, but also from the corporate side, and was at the beginning quite esoteric, but developed quite fast. And we decided to found Calirius to solve 2 things. So first of all, a procurement service for corporates, but also institutional investors, aligned with the climate targets on the one hand, and the other one is traditional finance combined with also Web3 elements for funding solutions to fund nature-based solution projects across the world, where we do our own risk assessment and MRV and so on and so forth.
Thank you, everyone, for the introduction. Now let's get into today's topic. And we titled this panel Adoption of Carbon Assets by Financial Institutions and Corporations. Simon, you are representing a couple of these institutions. Maybe you can give us a brief primer, and probably you're biased because you have a pilot project in your association, but maybe you can give us a primer on what do you think is the current state of the adoption of carbon assets at financial institutions? Is there any at all?
You mean when it comes to blockchain-based carbon assets?
Yeah.
Well, there, honestly, I do believe that's quite new, especially to traditional banks. We all know that a lot of institutions, and so our institutions or member banks as well, they committed to net zero. Some of them have joined the Net Zero Banking Alliance, but at the first step, most of them they try to avoid or reduce their CO2 emissions, and then they offset. And most of them, that's at least my experience, they do it with, let's say, in cooperation with companies like MyClimate, South Pole, and so on. So they just use a cooperation partner to offset the unavoidable CO2 emissions, but not. That's at least my experience, not using blockchain or blockchain technology.
And you had this one project, and you talked about in your introduction about the one that you walk us through your example, what you did at your association.
Yeah, we committed to net zero as well as a banking association, and we wanted to offset our unavoidable CO2 emissions, obviously, as well. But what we said, we want to, as the strategy, the roadmap 2025 I mentioned, is focused on the two pillars, digitalization and sustainability. We wanted to do it on chain. So the first step was to calculate our unavoidable CO2 emissions. Then we tried to figure out, okay, which kind of blockchain we want to use. And since, well, it should be a sustainability project, so sustainable, or the most sustainable blockchain was very important to use. We have chosen Polygon blockchain. And then we found with ClimaDAO quite an interesting partner. We contacted them and we issued our own NFTs, embedded a Klima token in these NFTs, and all of these NFTs, all of these tokens, offsetted and invested in a reforestation project in Colombia. So the idea was to use NFTs to communicate and, let's say, to involve as well our banking employees working in the financial services industry, and then at the same time to offset on-chain our own CO2 footprint. That was the idea.
Michael, you talked about in your introduction that you had a banking background. Is this a typical use case of blockchain technology and carbon in a bank?
Well, carbon as such, and this is what Simon obviously referred to, is quite a big topic in banks, right? On the commodity desk and trading desks and so on and so forth. Blockchain as such is not really there when it comes to like the adoption of tokens and tokenized assets in general, but especially in carbon, because the carbon comes with two problems. So first of all, it's a carbon. So what it is, what's the legal nature of a carbon credit by such? And on top, you build a token. So there's a kind of a double problem to solve. And, it might be blocked by one or the other. So this is number one. Other than that, I mean, we use blockchain as simply as an infrastructure tool. So for the track and trace, for example, where biochar up, there's a company called Carbon Future. We're using that. There is on the ground validation data from protocols like Open Forest Protocol we use to combine it with our satellite data. There is the intention to build projects from scratch on the blockchain to have a seamless audit trail from initiation until the retirement of the credit. So the NFT thing is quite an interesting part of it, because when you go away from the compensation element of carbon credits, where everybody tends to because of greenwashing claims and so on and so forth. So the question is always, what do I have then? And at the end of the day, it's a marketing tool as well, let's face it, which is great because, you know, it could be, the money could be spent worse. And then the NFT can be indeed a very interesting tool for that.
Yeah, what do I have then? Indeed, a great question, maybe for the lawyer in this panel, because what do I have then, especially in Germany, if I talk to my German contacts about tokens in general, and I have exactly the same problem. Most of the time, I do not try to incorporate blockchain as much as the sustainability part of it. So I'm interested, Victoria, is there even a regulatory landscape where a bank could approach tokenized carbon credits, and I'm going to play this back to Raphael afterwards, could approach someone and say, let's integrate this into our accounting, for example?
Yes, sure. We have the fragmented regulatory landscape at the moment until MiCA will enter into force, which will be in June, hopefully. So at the moment, we have just the view on the German prudential law, and there we have different token classifications. We have the utility token. Most of the carbon credits or carbon credit token we recognize in the market are utility token, but you can also structure them as a security token, which is kind of security as the name introduces. And then you can also have these payment token, but we are just looking on the security token and the utility tokens. And these token classification are linked to specific regulatory requirements. And then you have the KWG, which is the Banking Act in Germany, and the Investment Firm Act. And these acts are stipulating several requirements, and when you're complying with these requirements, because your product is structured in the right way, you have a very reliable product which is very attractive to institutional investors. And this is also interesting for banks because they can invest in these products and have a reliable product which is able to be traded on the whole market. So with the right product and regulated counterparts, you can strengthen this whole market with a tradable product. And this is a great opportunity for the voluntary carbon market, especially on a tokenized way.
So Raphael, thumbs up, all clear, nothing to wish for in the regulatory landscape for you?
Well, from my perspective, I would say so. Yes, we have a lot of options basically in Liechtenstein, which we can pull here. So we're really flexible on this. But what we're talking about is carbon, and carbon is, as like our partners here in this panel said, a quite complex thing. Like we really try to look for a lot of like attributes this token or whatever it's supposed to be has to have in the end. Like what do we focus on? Like we have on the one side, of course, the whole responsibility part that we really try to look for where was this carbon basically captured? Is it a legal thing? Like Michael explained with the videos from space, or like also ground validation. That's definitely like a huge topic about it. But like from my side, from Hardstock's side, we will focus a lot on basically the product which a person can buy. So maybe this is more like a financial product. So what do we look for here? It's, I would say, tradability. Maybe it's even fungibility. It's maybe the option to redeem things. And there might be not like one product which combines it all. It might be a hybrid out of two of them, and to basically serve both worlds, like the financial world and the purpose of basically offsetting carbon on the other side. But right now, now we are really flexible in figuring out what we really want, but we have to make sure what is our main aim here and what do we have to focus on the outer shell to see how it's tradable. And Liechtenstein, or like Hardstocks, does have the ability to basically to measure out and like basically design a product like that on its own.
So Simon, help me out here. I'm just getting the vibes. Yeah, it's so easy. Regulatory clearance is there. The market is there. Products are there. But you talked about, okay, adoption from financial institutions is not as high as it could be. So how are these two like stories pieced together?
Well, maybe the experience we made with our pilot project, I would say that we are still in the very beginning, because the experience we made and the reactions we got from our members and from, as I said, the traditional banks, they couldn't have been more different. We minted 500 NFTs, so each of these NFTs had it embedded like 2 tons of CO2. But not as many NFTs have been claimed, honestly, as we expected, or at least hoped during that first phase. So we still think there is a lot of reluctance and skepticism in the market when it comes to digital assets as such. Maybe a lot of misconception when we talk about blockchain technology, digital assets, cryptocurrencies, and so on. So my key learning from our project was that there is still a long way to go. We are at the very beginning of a very interesting journey. There is a lot to communicate and a lot to educate.
That's why we're both heads of associations, right? Michael, we talked earlier, and I think you also shared the perspective that the market demand isn't there where it could be, right?
Yeah, well, in general, the market is anyway these days very dull, to be honest, when it comes to volume, simply because of what happened for the underlying asset. I.e., if you read about these articles in The Guardian and Zeit, for example, and also that the climate neutral claim basically is now even legally pursued by the EU and with the EU Green Claims Directive. So this is the underlying asset as such. Is the volume is still there. So on top of that, the complexity of this carbon credit is simply so high that it does not allow at this stage standardization. And standardization is absolutely needed to scale the whole market for financial players, simply because they need hedging, de-risking, and insurance options, which are not existing. And even if you have an insurance option with players like ECOTA, for example, you don't have an in-kind insurance. And this in-kind insurance is very, very important, though, because if you want to have insured your ton of CO2, which is part of your climate commitment, your climate strategy, which is publicly seen on, and you committed to the SBTi targets and you don't get it, the delivery risk there is a high reputation risk. In the absence of all these mechanisms, this is the reason why the market is where it is as of today.
So that would mean, what would it take, Rafael, maybe to you? Why aren't people buying it? I mean, if everything is there.
I think, as Michael said, on the one hand, the standardization is really lacking. So everyone is basically selling a different product with its own caveats and own like pros. So that's the real question, like, what are we talking about? And we need to get this standardized. And there's, of course, associations going on and trying to actually make this happen. But as of now, also due to the different regulations, everyone is looking into it. It's a really tough cookie right now. On the other side, what is also needs to be handled is definitely the management of it. Like the person who wants to solve a problem, I want to offset my carbon. The question is, how do I do it that easy and that like also transparent and feasible for everyone to grasp and understand, so that I can use it. So basically we are lacking right now one of these, maybe a great UI might be the topic, like a great easy like tool to manage that, the standardization, where does the money go, who keeps it, how about the liquidity, and how can I check if I offset something? All these questions around standardization and use and look and feel are right now basically in a trial and error phase. Like it's been said, it's a really early phase right now to talk about it. So I think it's a really important phase we go through right now. It's the build phase, biddle, as we say in the crypto space. I think it's really important to not focus on blockchain in the outside communication, because it will just confuse people and basically steer it up with Bitcoin. And isn't that like something bad for the environment? Like people are messing things up like this, unfortunately, like not in the like educated bubble we are in, but this is definitely not true for the whole like outside perspective out of this bubble. So there's really important communication to be done, like education, as it was mentioned, standardization, and easy to use interfaces in order to basically handle all these carbon credits.
And we talked about this on the demand side. And Victoria, I want to bring this back to so like the supply side, because when I talk to builder, what was the term again? Yeah, but
it's wrong English. It's biddle, but we will
biddle, yeah, the biddlers. Yeah, it's a HODL analogy, right? Yeah, okay. So to the biddlers, and you talked about the classification of, is it a security token? Is it a utility token? And most of the founders I talk to, especially if they're in Europe and especially if they're in Germany, are reluctant to approach a lawyer with this, because they simply just don't know themselves what would be the best alternative for me. So maybe you can walk us through what are some advantages and disadvantages of the different categorization, and I will bring this back together to Simon and Michael afterwards.
Yes. One thing which is linked to the standardization process. At the moment, we have these fragmented legislation. So this is all so confusing for the market participant. Is it a utility token, a security token? What characteristics leads to which categorization? So in the future, we will have MiCA, and MiCA will capture all the token, or mostly all token, which are issued in high volume. So then we have a kind of standardization in the EU, because there is no fragmentation anymore as regards the legislation in Germany or in France or so on and so forth. And this will contribute to the standardization process, which is very good. At the moment, we have, from a German perspective, we have the utility token, which is mostly out of scope, out of the regulatory scope. And most of the market participants are using this loophole to structure their product. But this is from first perspective, it is an advantage, but in fact, it's a disadvantage, because you're not complying with the regulatory landscape until MiCA will enter force. And then you have to describe what are the specific terms of your product, and you have to explain the institutional investor how your product will comply with all the requirements. And on the other hand, you can structure your product as a kind of security token. Then you have the requirement to grant an authorization by the NCAs, which is a high burden, but then you are a regulated company, and then you have a very high standard in this whole market. It is a high burden, but we want to motivate the market to face these requirements or these challenges, and to provide the market with these professional products, and to enter in the structure like hard stocks provide to issue and to trade these products. Then we will have a very strong market, and yes, then we can mitigate the lacks of trust, and then we can strengthen the market in a good way.
Said I want to bring this back to Simon, and there is a question from the audience that I want to integrate into this. So you've chosen to emit NFTs, for example, for your pilot project, but so this panel also talked about like standardization, the big volumes. Why did you opt for NFTs and not for something like fungible that could be traded between like the different? I could trade with my colleague, for example, my fungible tokens. So why did you opt for NFTs?
Well, it was a very simple reason. I mean, the beginning or the start of our pilot project was, okay, we have our strategy, we have a visualization of our strategy, and the strategy has two pillars, which is sustainability, sustainable finance, and digitalization. So as we have this or did this visualization of the strategy, we said, okay, why not using NFTs as a kind of a social token to communicate our strategy, but to use that as well to bring in a very tangible way these two aspects of blockchain technology and sustainability together. And that was the reason why we have chosen NFTs. So it's a kind of a social token. It was in a storytelling way, we wanted to make use of the blockchain technology and at the same time to offset our own CO2 footprint. So this was more kind of it was a conscious decision, but not, let's say we didn't analyze, okay, what kind of digital assets or tokens should we use? It was more kind of, okay, since education and communication is very important, we have chosen that as a first step, and it's just, as I said, an MVP and the first step into that space. But what I fully agree with Victoria, to come back on what she just said is, MiCA is a big step. We need harmonization, and we need, of course, legal certainty, and that was as well. Since Raphael mentioned Liechtenstein and maybe a reference as well to the blockchain law in Liechtenstein, that was what we experienced with the TB2G or the blockchain law. We call it all startup companies and all people we discussed blockchain technology, blockchain use cases, and so on. That was one of the most important aspects, to have legal certainty and predictability. So kind of a clear framework where they can build their business and go forward and experiment. And it was, honestly, that was a very important aspect for us as well.
So let me bring these 2 points together. So and let me pose this question to you, Michael. So we have something that we should remove middlemen, we should build trust, education, interoperability, standardization. These are some things that I personally associate with blockchain technology, but the market demand has a different perspective on this. Why is that?
I think the market does not have a different perspective on the blockchain, on the benefits of blockchain, if it's clear what it is, if it's fully regulated, if it's clear how you account for it and how it's taxed and so on and so forth. I think it's not the point. I mean, having said that, the infrastructure at most of the banks is not there, but it's in the making, or even with the other players, right? And they don't feel the necessity yet, simply because you can use a normal marketplace today, let's say a carbon, and you settle there for a cent a ton with any counterpart, which is KYC. So why should you change something as long as you don't have the benefits? And the most of the benefits. The problem has to be tackled from two sides. So one is the regulatory element, which Victoria described on the one hand, but the other one is the underlying problem of the underlying, which is the carbon credit as such and the projects behind it, i.e., the measurement behind it, the verification, the additionality and the permanence, all the issue which comes and are frequently cited by newspapers in the voluntary carbon market. And if both ends grow together, then you have the market we're all longing for. And on both sides of this equation, actually, the blockchain can do a lot to support that, right?
So, Raphael, what are some things that we could do? I mean, you're building on this. What are some ways that you can do to drive adoption? And I'm talking especially about institutions here, not about you and me.
Okay, for institutional adoption, what can we do? Right now, what we can is we can design products and we can try it out. I think which is really important is to learn from an unfortunate, like from mistakes or like from things other projects experience, for instance, an NFT, which I think is a great idea to start with in order to just like have a certain link to one carbon. Like it's an easy principle to communicate, which is important. So it's easily graspable. But of course, on the other hand, as soon as one NFT is redeemed, one of those 500, it's done. And what we need basically is a container system which we can use and fill again and trade again. So this has to be like a really interesting like container in that sense, what we're talking about. So what we can do is right now just to go ahead, use the regulatory market, really try to be avant-gardistic, maybe even from the EU perspective, show the world how it's done, show them an approach we can rely on, which is provable, which makes sense. And I think this is really important for the whole world. And I think it's also one of those strong capabilities the EU can do is making a standardization and also showing the world how it's done. So the whole market and the whole world basically looks for these responsibility topics. And so everyone knows that they have to do something about it, and it will come up and the pressure will increase. So it is a global problem, and it will definitely scale on that side for sure. So it will definitely have a demand as well. And I think what we will look for and what we need to do right now is try to figure out what are the mistakes, try to solve them, try to bring them into a regulated market, try to explain them, try to make them easily usable, and also be open for critics and also listen to feedback. What's going on? Can you use it? Is there a problem? Can we show it into the bank, into the depots? How can we trade it? Does it have like an eSIN? Can we regulate even carbon credits on an EU level? I think this is basically what we have to do right now, and we should also take this responsibility to try that out. I think this is basically what brings ECOTA together as well, in order to really make this happen and also make an avant-gardistic approach for the time which is needed.
Thanks for taking on my role and combining the dots here. Yeah, that's what we're trying at ECOTA. Victoria, I'm interested in, is there something that if you could make a wish in the EU regulatory landscape for the VCM to scale, what would be one thing that could bring the market forward in a way that Raphael just talked about? What would be one thing that could be interesting?
I think an approach could be to combine the ESG requirements with the voluntary carbon market in a way, and based on a law or kind of special act, because the companies have to comply with the ESG requirements. This is an obligation for the whole industry. And I think the aspect of the obligation is also important for the voluntary carbon market. It is the voluntary carbon market, but when you incentivize the market to comply with the kind of, I have to buy or to be net zero or to offset my emissions with a yes obligation part, it could be an opportunity to strengthen the market. This is an idea in my mind, but yes, when we are able or capable to strengthen the market on its own, then we don't need this requirement part. But I think at the moment that we have a lack of standardization, and the problem is it will take time. It will take time to adopt all these the market, to standardize the market in a way which is able to give the reliability to the market. So with a part of obligation, we can contribute to speed up the process in a way. That's something that is in my mind at the moment.
So Simon, let's suppose that this wish come true and we can combine so like the legacy carbon market and the regulatory and legal requirements there with the advantages that Web3 brings. So let's suppose this comes true. Would there be a pitch that your banks in your association would be interested in? Is this the thing that they are looking for, or what do you think about this?
I hope so. I wouldn't go so far to let's say to confirm they will, but I hope so. But still, I do believe that maybe the offsetting is not what we should focus on only. What I'm longing for, what maybe is one of a next project I would be very keen to develop or to experiment with, is a kind of a tokenized securities token, be it an impact bond, a green bond, a blue bond, whatever, because then we will invest in these kind of project with a direct impact, but have the efficiency using blockchain technology, and so in that way to reduce costs. And the offsetting would then be obviously a byproduct, but not the, let's say, the only goal. And that's what I really would wish, and what I would long for to have these kind of projects more in the market. And then I'm really convinced these kind of products will be applied, and banks at the forefront will use them very heavily.
So, Michael, let's suppose this comes true. I'm doing a circle in this. Let's just suppose everything comes true. I'm interested in, so I've talked about how I do not incorporate blockchain too much in my pitches. So will blockchain technology ultimately in this like kind of market that Simon just structured, will it be like the internet, so like the base layer of everything, but not as prominently on a technical level explained as, so I don't get the internet, obviously, like from a technical perspective, but I get the value proposition that it poses. For example, that we can talk here all together at the same time and stream it out to the world. So will it be more like the internet, or is it important to understand there are different blockchain, there are different consensus mechanisms? Raphael, you can take on after that if you want to.
No, not at all. Blockchain is the infrastructure. It's like you're not emphasizing that you have a web shop in the internet, right? Or mentioning the protocol or something. So it's easy as that. So all the benefits from the blockchain come up with the blockchain as an infrastructure rather than tokenizing. Because if you tokenize a bad credit, it still is a bad credit, but it's only tokenized, right? So the whole kind of build-up comes from the infrastructure as blockchain as infrastructure thing, right? By the way, just to come back to what Simon said, which is a super interesting part, because we are focusing on that as well, right? Moving away as well, and this is also something where blockchain comes into place, moving away from the pure ton of CO2 and the pure carbon element, but also kind of splitting that up into biodiversity and water and fertilizer reduction and what have you, which will be an important asset in the future as well, on top of carbon, right?
Yeah, Raphael, take it.
Okay, happy to do so. So like coming back to one thing, Simon, like the internet versus blockchain, I think the internet is just like an information layer. Blockchain is the value layer, and people don't care. No, they don't. Like they don't want to be bored by it. They're confused by it. They're scared by it. It's like we should really like take this out of the, like, accept the nerd world or the bubble. Yes, everything else, no. Other than that, I think we have a huge outside problem with carbon credits, which needs to be addressed, and there is blockchain almost the holy grail, but it's just one part of it. We have a huge trust problem with the carbon section. Like the whole greenwashing like threat is a huge problem. Also that it's not standardized in like international ways. Like I think the most important, which we have to standardize really soon, is to really figure out where is carbon actually be captured and how to measure it, how much it is. I think these are like really two things. As soon as we can get this standardized in the world, this is a huge step. Then the technology is there, blockchain, to basically build a trustless network everyone can rely on, because we cannot rely on anything else right now, especially on like an international thing. The next thing which is like crucial in the whole situation is to have a standardized price on carbon. I think we almost do have this already, but it's really important that this price tag is in the focus, because this price tag on a standardized carbon credit is basically the pressure for the market to handle and do things, which is the most important thing, and transparent things. If it's like too cheap, people will not really care about it. If it's too expensive, it's a problem. But the most important thing is that people care, and that's the most important. Right now, when someone comes up, no, 90% is greenwashed, like it's all garbage what you do, the motivation sinks away, and people will not like be d'accord in the whole work and effort you put in. So I think right now we have to basically solve first like this trust problem into where is carbon actually being captured, and later on maybe offset. And the second one is the infrastructure technology level. It's our thing to figure out. I think the market doesn't. They just want to have the product at the end, which is easy and simple. But we need to solve both things. The first one goes to credibility in order to make this whole product happen.
So looking on the time, we're coming up on time, but I want to have one last topic. And Victoria, let's start with you on this one. So we talked about a financial institution as a given, right? We want financial institution in the market, but maybe we can end on this topic. Why do we even want them? Why can't we just like offset our own personal individual footprint with our MetaMasks? Why do we need a financial institution in the market? So maybe you can give us a last like primer on what, for example, regulatory competencies can we use in the VCM that are proven in sort of like the traditional markets of financial institution that could be valuable.
Yes, this topic is again linked to the standardization process, because in our legacy world and our traditional financial market is based on standardization. We have financial instruments which are standardized by the applicable law and so on and so forth. And we also need standardization in the voluntary carbon market to have a product which is fungible. When you buy a carbon credit token, you want to sell it to a price, and you want to have a buyer or a counterpart who is interested in this product. And this requires a standardization process in the whole market. And to reach this standardization, we need the regulatory framework, which will be provided by MiCA in a right way. But we also need the intermediaries who are capable to trade these products. And to reach this, we need this standardization process. And this is and this is why this fragmented market, which we see now, is difficult to strengthen this market and to reach tradability in the whole market with a whole range of carbon credit product. My prospect is that we will have in the future, I think, some classifications, some base products, product A, B, C, and D, and these like financial instruments will be tradable on the whole voluntary carbon market. So we will have kind of, big player and the market participants around these players, and it will be quite similar to the traditional market. That's my opinion, or that is also, I think, a wish, because then we will have a market which is able to bring added value to also the net zero goal. And because we will then have a professional product, and this requires for sure, or of course, that the methodologies behind these products are reliable. This is a requirement for the whole process.
So the VCM becoming more like the traditional banking industry. Now let me play the unfair devil's advocate here, Simon. If you look today in the banking industry in the US, for example, you could say that it's maybe not it could be more stable, for example, and it could be a more secure system. So maybe probably because this topic is at your heart, what are some some things that banks could add to the VCM?
I would say there are two ways. First of all, since the banks have committed themselves to net zero, they are obviously as well inclined using the VCM market. That's one thing, and the other thing is in the whole process, I still believe banks are in a very strong position in offering financial service products. And as I mentioned, using blockchain technology to make these financial products more efficient. I'm very much convinced this is a game changer for financial services industry. But it's, as I said before, it's a long journey to go. And MiCA will play there a very important role when it comes to harmonization. And hopefully the banking industry will experiment. This is maybe the most important part. We are not very strong in a traditional banking environment to experiment or maybe to fail. But this is very certain that you have to experiment, and you will, when you experiment, you will maybe fail with one product, and you have to choose or go another route, another way. And this is maybe not the way financial products have been developed in the past century.
Let's close with our two builders in this panel. So, Raphael, let's start with you. Would be interested in what? So you're an institution yourself, coming to an institution like 2 steps away from it, maybe. But what could be something that institutions could add, and what are you looking forward to, and why do you want institutions in the market?
I'm a huge fan of institutions, also of the whole banks. Like we integrate them in our system, and I really think that's a key thing for our whole network, especially for the adoption, because people trust banks, and most of us most likely will have their money there, and maybe even their depot for stocks or something like that. So they still do something. They're perfect custodians, they're perfect product handlers in the financial section. Maybe they're even consultants for the retail space or institutions, other institutions, firms. So what I would love to see by banks is basically provide a space, a round table where they participate and also invite all the stakeholders which are needed here for the setup. What I'm talking about is basically the bank itself, but also lawyers, also the regulator, maybe builders like us, experts in the field of carbon and capturing and how to do it. Also maybe tax people, how to tax on that. So also marketing. So we have a lot of stakeholders which we need to get involved here in order to educate each other, to see what is actually what we need about it, and to be open to talk and to see, put some effort into it, some money, some time, some brains, in order to really develop and further increment on the product. Like there's not going to be one first product which will solve all our problems, but there has to be like an always coming together of these stakeholders, hopefully provided by a bank consortiums, which is a key player here. Also going for their own values and goals, like said by Simon, that they want to be net zero. So they have their own interest in solving this problem, but of course they're also just part of it, and realizing and maybe being the giant who can do a lot here, who can who has like a light of glow, maybe national-wide, international-wide, EU-wide. That's like a different topic, but I think we really need them. We need them for the infrastructure, we need them for the setup, we need them for the table, and we need them in a certain mindset as described.
Michael, sorry, Simon, go ahead.
Just if I may add a sentence, I very much like the statement made by Raphael, because it brings us back to, we should think in ecosystems and not in silos anymore. And I very much like that.
So Michael, you're a banker turned founder. Is that something that resonates with you? That's something that from your perspective could become a reality?
Yeah, absolutely. I mean, ecosystem is exactly the word, right? If you, and this is where blockchain can be a super important role, because if you look what Maersk tried to do with TradeLens and IBM to put the whole ecosystem on the blockchain, it failed because it was simply too early, if you ask me. But the same does Microsoft now with the carbon market, with the environmental credit service, where they try to get every stakeholder on the blockchain, right? From project developer to verification, validation bodies, to buyers, to everybody, rating agencies and what have you. And if you have that complete ecosystem on chain, I mean, this will be amazing. And then, you know, coming back also to the bank roles of a bank, you should not forget that the whole the carbon market was during the Kyoto times under the clean development mechanism was quite a big thing for markets. They traded it. Why? It was a ton of CO2, nothing else than that. So you didn't have to deal with like additionality in which location, if it's afforestation, it's reforestation, it's a reverted peatland and what have you. And so banks did a lot of trading there. And I think if it's the voluntary carbon market will be standardized like that again, in a different way though, it will be the same ball game.
So we're already over time, so unfortunately I have to cut it here. As always, we could talk for, I think, a couple of hours about this. So thank you very much. It has been a great discussion. Victoria, Simon, Raphael, Michael, thank you very much for being with us today and making this such an interesting conversation. Also, thanks to everyone of you in the audience. I hope you enjoyed this event. You can follow ECOTA on LinkedIn and Twitter so that you don't miss any of our upcoming events. And if you are an individual, you can join us as an expert, as some of our panelists already did. You can become an expert or a fellow, or if you're an organization, you can join us as an institutional member and work with us together to decarbonize our future with blockchain technology and hopefully with a commoditized market and with banks, like we talked about in this panel. So thanks everyone, and talk to you soon. Bye-bye.